When most property investors think about Australia, they usually think Sydney, Melbourne, Brisbane, but some of the smartest property investors I see right now are quietly buying in Canberra. And the funny thing is, Canberra is usually the first city property investors rule out. Why does Canberra get overlooked? Usually it's because of the higher land tax, higher rates, the residential tenancy laws are a bit stricter, and just overall the holding costs are higher. And to be honest with you, if your goal is cash flow, then Canberra probably isn't the city to invest in. But if your goal is capital growth, then the story changes completely. Smart investors don't ask themselves, where's the cheapest place I can buy? They're looking at cities or suburbs where the demand is increasing whilst the supply is remaining tight. So that's what causes capital growth to occur. And there are a number of suburbs in Australia that do this better than almost anywhere else. Some of the best suburbs in Australia with the best supply and demand metrics are actually in Canberra. And yet most investors don't even think about Canberra. So in this video, I'm going to run you through how I do a search for suburbs that are showing great supply and demand metrics that predict future capital growth. I'm going to look for a property that's $850,000 or more in a warm spot, not in a hot spot that's currently overhyped and difficult to purchase in. And you'll see why exactly Canberra keeps popping up. So let me explain exactly what I mean when I say a warm spot. So a warm spot is a suburb that currently has a restricted supply and a decreasing supply over the long term. So the trend is trending down, the supply is getting less and less, where the demand is slowly increasing. So with a restricting supply and an increasing demand, that is what causes capital growth and prices to increase. So a warm spot's different to a hot spot. So a hot spot is a suburb that's already taken off. There's lots of publicity about the suburb. Price growth is over 10% in a year. There's lots of demand, overhyped. It's difficult to purchase in those suburbs because they're getting lots of interest. Warm spots are earlier in the property cycle where it's a good time to purchase before the demand increases and the suburb becomes a hotspot. So if you're a property investor that cares more about where the market's going, not where the market has already been, then these are the suburbs you want to be looking into. Let's jump into the data and I'll show you why Canberra stacks up. Okay, so I'll show you what these metrics are doing. So I'm searching at the suburb level for houses, not units. The price I've filtered between $850,000 and $5 million. I want the confidence of the data to be high. I don't want to be searching in suburbs where there's not enough sales in the suburb for the data to be accurate, because you don't want to be making investment decisions on inaccurate data. So that's why we keep that as high confidence. I don't want to be investing in a suburb where the risk is high. So risk could be, environmental factors like flooding or bushfires, as well as economic diversity. So what I've done there is filtered that to 50 or above, so greater than 50. So that means that the suburbs I'm looking in are in the top 50% of low risk suburbs. Affordability index is really important. So I want to be looking at suburbs where the affordability is, it's still affordable for its residents to purchase. I don't want to look at suburbs where it's becoming unaffordable for its residents to keep purchasing there, because once it becomes unaffordable, then capital growth tends to slow down. So that's represented in a years to own number. So we're going to keep that at less than 45 years to own. Preferably I'm looking at less than 35 years to own, or even closer to 30. So I want to filter suburbs with a high socioeconomic score. So that's why that's in a score from 1 to 10. So I want it to be above 4. It's rare to see suburbs less than a score of 4 for IRSAD get over $1 million. So that's why we put that at 4. I want a low stock on market. So I've put that at 1.5% or less. I also want to see that the stock on market is decreasing over time. So that's why I've put this metric in, which I can show you later, as well as the inventory. I want to see that decreasing over time as well. So the BA ratio, I've put that at less than 1.5. So that's building approval ratio. I want to look for suburbs where there's not many building approvals because I want the supply to be restricted. I don't want an influx of new buildings to come in, increasing the supply. I also want a high hold period. So that metric shows how long on average its residents own the property in that suburb. So I want the residents to be owning it for 7 years or more, because that also restricts supply. If it's low, that means that people are buying there and then selling quickly, which can increase the stock on market. And then this last metric, I want the price change over the last year to be less than or equal to 10%. Once it starts getting over 10% in a year, it starts going into that hotspot territory. So as I mentioned, I want it to be a warm spot before the demand is really high and it's difficult to purchase in that suburb. Okay, so this is the search result. So it's searched through every suburb in Australia and it's filtered it down to 106 suburbs. So the next thing I'll do is just compare these suburbs by putting a weighting against certain metrics. So I've got a formula set up here the way I like it, so that it weights the important metrics higher and the less important metrics for capital growth as lower. So I'll run that, and then that puts them in order. So as you'll see, these are the top 10 suburbs in Australia that show the best warm spots for houses over $850,000. So you'll see that Gordon is in the ACT is number 2 in the whole of Australia. We've also got McGregor in the top 10. So there's 2 Canberra suburbs in the top 10 warm spots of all of Australia. So let's go top 20, shall we? So we've also got Conda in the ACT. Jerrabomberra is in there. So that's technically New South Wales, but that's just outside the ACT. So I tend to count that as well. And we've got Theodore as well. So as you'll see, there's a number of Canberra suburbs in the best suburbs to invest in if you want a warm spot and you're looking to purchase a house over $850,000. So let's run through Gordon, shall we? And I can explain what the data for Gordon looks like. Okay, so Gordon, I'll show you just some of the key metrics down here. So I look at the typical price over time for Gordon. So this is going all the way back to 2007, all the way up to today. So we can see that it is generally always going up. And in 2021, it really boomed. So that was the COVID sort of years, the COVID boom, and then has leveled off, decreased a little bit, and now has started increasing. So we can see that in the last year, Gordon has increased by 7.46%. So that's starting to increase quite quickly and heading towards that hotspot of over 10% in a year. The long term, Gordon has increased in price 85.62%. So that's looking good too. This curve is pretty useful as well. So this shows the growth rate cycle. So this is really good at seeing the property market cycle. So most suburbs go in a cycle where property prices increase and then slow down or decrease for a bit and then increase again. So we can see that Gordon, this is going back to 2009. It was increasing there and then decreased in price for a little bit between 2012 and 2013, but has mostly been in the positive. And then this shows 2021 that it was increasing by, 24% in 2021, and then has slowed down after 2021, had a bit of time in the negative, but has started increasing again. So this is the perfect time to start looking at purchasing in Gordon because it's at the bottom of the cycle. Gordon's got a very high socio-economic score of 9. It's out of 10, so that's good to see. The renter to owner ratio in Gordon is pretty good. It's 19%. So we want mostly owners in the suburb rather than renters, because that means that it's got lots of owner occupiers rather than property investors. So owner occupiers tend to stay longer, invest more money into their properties, and you see people paying more for properties when it's a high owner occupier suburb. There's low units to houses in Gordon, which is good to see. What else do I look at? Affordability index. So that's really important. So that's what puts Gordon very high. So it's still a very affordable suburb, sitting at, let's say, 33 years to own. So that makes it still affordable for its residents. So there's a lot of room there to increase in price and still be affordable. So that is really key for Gordon. And then we can see some of the supply and demand metrics here. So stock on market, 0.15%. So that's very restricted. Building approvals, there's one building approval. So again, restricted supply. 10.7 years for the whole period. That's really good. People are holding onto their properties for a long time. The days on market in Gordon are currently 29 days. So that is good, and properties aren't lasting very long on the market. Vacancy rate is very low, 0.51%. So these graphs are really useful. So this shows the stock on market over time. So this is going back to 2020, and we can see that the stock on market has been decreasing over the long term. So that is what we want to see to predict future capital growth. If the supply is decreasing over time, that is what we want to see over time, because a restricted supply is key for capital growth. And then on this side, we can see that the days on market has been staying relatively level since 2020, maybe slowly increasing a little bit, but you can see in the short term, the days on market is starting to come down. So that means that the demand is starting to increase whilst the supply is decreasing. So that's what is causing capital growth in the future. So that's how I look for suburbs that are good to invest in. And as you'll see, if you're looking at purchasing in a warm spot for a house above $850,000, Canberra should definitely be in your areas to look in. So thank you for watching. That's all I wanted to run you through today. Hopefully you enjoyed it and you got a bit of value from it. If you're thinking about purchasing in Canberra, or you just want some information about investing in Canberra, some Canberra property market insights, make sure you follow my page. You can also reach out to me and we can have a chat about the best strategy for your particular circumstances. If you liked this video, make sure you hit the like button. Also, you can add in a comment, give me some feedback, give me some ideas for future videos. And to keep up to date with my videos, make sure you hit the subscribe button. All right, thanks again.